Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1308th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video coming to you on a Monday night for trading Tuesday, April 14th, 2015. Traders, pay attention. 1 day left. Pay your taxes. You've got 1 day left to file and or pay your taxes. Make sure you do. The IRS doesn't mess around. Traders, as we know, this is a risky game, but we've gone well beyond the usual. Futures trading can be risky, right? We know this is a risky business, but, you know, the way I look at it, the disclaimer should say something like, futures trading is risky and is really for just those who like a bit of pain and abuse in their daily diet. I don't know what else to tell you these days. Futures trading is beyond the realm of risky, and unless you like to get beat up in the markets, don't trade them. But there are traders that get this right, and for you traders out there that know what I'm talking about, rock and roll, let's go forward. So this video, which I want you to use for trading Monday night through Tuesday, April 14th, is going to be about a couple of quick issues. S&P right off the top. You've seen this chart in my last video last night. I showed it to you when the double top first happened. Top one, top two was a fantastic call. The market went down. The double top worked. And now we start to morph onto other things. Since then, we have morphed into an Oscarism. Oscar's F flag and rock and roll for the F flag because it has proven to be quite a friend to me in the last couple of years. So the F flag right here is what we're in right now, and I don't care what's out there that's bullish, bearish, or indifferent. This is a bullish formation, and I cannot call the downside while we're in a bullish formation. We are starting off this evening trading Monday night for Tuesday from a neutral posture. We will be neutral in the S&P starting off, but we will likely end up buying a dip somewhere or selling a rally, but the likelihood of buying a dip is strong. Why? Because we like to buy when inside of the F flag. If we break down out of it and move down here, we'll figure out what to do with it. But that would be speculating that we're going to break down. For now, we're in the F flag. We use the formation till it stops working. And for now, we are taking a neutral approach, but likely looking to buy a dip somewhere in here in the F flag. Again, starting off neutral, no trade. We'll see how it works. Come on down to livewithoscar.com. Come into my free trading room, and you'll see the trades happen live as I call them throughout the day. So here's your NASDAQ. Let's move forward to another. The E-mini S&P, if you will. E-mini S&P. Take a look at this bad boy. All right, so E-mini, same sort of situation. However, we're closer to hitting the third top. We're not there, of course. There's plenty of room. But we got a little bit closer to hitting the third top on Monday. We did come out of a bull flag. The bull flag right here looks fantastic. And now we've got the formation right here leaving off where we sit on Monday evening. And if you ask me, traders, this is another flagpole. This is another F flag forming in the E-mini S&P. Now we've got one in the NASDAQ. And I believe that that's a baby F flag in its infancy stages. And it looks like it wants to, embryo stages, if you will. Looks like it will probably stay inside of the F flag and move towards top number 3. Once again, however, we are starting off this day in the E-mini S&P and NASDAQ the same way. We are neutral to start the day off. We'll see where that goes. But being neutral in the indices doesn't mean we don't have an arena to go play in, because absolutely unequivocally we do, and we will go to that arena. Before I take you here, in fact, let me go here. Look at this chart. Before we look at the dollar, let me show you the gold. This chart I've been showing you for weeks on end, more often now in the last few videos because it's coming into play. Shoulder, head, shoulder, massive head and shoulders formation. Here is your left shoulder if you cannot see it. The circle is meaningless. It's the gathering of bars, the grouping that is meaningful. Then there is your head. The circle, once again, or the oval is meaningless, but it's just there for a picture. H, head, shoulder. Then we have the right shoulder right here in front of your eyes. Yes, it's some sort of inverted head and shoulders sitting here, right? Left shoulder, head, right shoulder. You've got some kind of inverted head and shoulders right here. Inside of the right shoulder, you've got a bear flag. That's the one we're going to concentrate on for now. Forget about the rest of this. Let's work with one day at a time. So we're inside of the big right shoulder. We're at a bear flag. Bear flags usually produce a downward move. We're expecting more downside in your gold for trading on Tuesday, the 14th of April. So we will be selling rallies in gold. I wanted you to see the OMNI arrow is red in gold. So OMNI arrow for gold, we'll just write OMNI here so that you do not forget it. You've seen it. The OMNI is red for trading gold on Tuesday, at least at the onset of trading. We'll see where it goes from there. So you've got two charts I wanted to show you. And here is a third, very, very interesting chart. We study charts like this at the OMNI Trading Academy, livewithoscar.com every day. Be sure to come into my trading room where I can help you. The room is free, and I'll be more than happy to help point you in the right direction. Then we've got this, traders, the almighty dollar index, EDXM 15. This is a daily bar. You'll recognize it's in a wonderful channel. You'll recognize it's moving very smartly right here inside of a new, very, very sharp channel right here. Very, very good look to the chart, but let's remove the channel because there's something else here. Note the average. Almost every time you hit the average, you make some sort of a jet towards the top. It gets more pronounced once you hit the average a second time. Boom, towards the top. Hit the average. Jet towards the top. Hit the average. Make a run up. Have a pullback. Jet towards the top. Why not go to the top? Because that's what it does after hitting the average. That's the dollar index. If the dollar index remains bullish, and let's see what kind of arrow we have here. If the dollar index remains bullish, and I'll make it green just to have the visual, then, of course, indices, well, I shouldn't say really indices, but commodities and things like gold will certainly become bearish. So what you've got right now is up in your dollar index. And if that continues, it puts weight on things like gold. So that's why when we looked at the gold chart, it looks to me like the head and shoulders is starting to pan out. We'll find out. There is a flag right here. We love it. And it would make sense for gold to go down once again if we are going to get the dollars to move higher. So interesting play. That's what I'm looking at. Traders, this is for trading April 14th. That's Tuesday, 2015. I hope these videos are helping to keep you in tune with market movement, where markets should be going next, and certainly keeping you in tune with the art of technical analysis. Traders, thank you so much for tuning into my videos. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for tuning in, and I'll see you all at livewithoscar.com.